What's up, everybody? This is Semper with BRT. We have Toad on today. We have week 7 of Finding Your Way. We missed a couple of weeks, the last couple of weeks with 4th of July and me having work obligations to do. So hopefully Toad has been continuing his way of, or at least keep trading what we've left him off with what lessons we left him off with, so he can continue fine tuning his anchor VWAP strategy. And hopefully he's starting to see some consistency. Usually by the 8th week, you should be um, already kind of finding your grade A setup. You're starting to be more consistent, or at least a lot more than when you started. And you're probably not taking as many trades as when you started. A lot of Lasagna Cat, Easy, and Dell, they would be taking a lot of trades when they first started. And it's like, you have to be able to hit your goal within 3 to 4 trades and call it a day. If you get greedy, the market will punish you. The market will, you'll give back profits. So what I highly recommend is, if you hit your daily goal, if you hit your target, is take a breath, take a break, reevaluate, because you don't want to get clouded by the confidence. You now that you kind of got your psychology in check, that hey, you're not gonna get FOMO, you're gonna look for the perfect spot to get in, and always zoom out and ask yourself, where is a where is the best price to get in at? You don't want to start yelling out, oh, it can continue going up or it can continue going down. That's just a subjective statement. Yeah, it can continue going up, but where is the confirmation, or where is the best price for you to get in at? And if you're just getting in just because you're telling yourself that it can go up, I'm not saying that it can't go up, but you got to ask yourself, where is the best location or best price level for you to get in at? And that's why you have a strategy. The strategy will help you identify where the best price is, and also price action. Price action is going to tell you with candles where potential best price is. And just to start off, right here is a perfect example of using RSI divergence to tell you that there's going to be a pullback. So if you had missed this entry right here, or missed this play, is I usually look for a small red candle, like a small seller candle that gets taken out by a big, huge, aggressive buyer candle. That for me right there would identify that it's a good price level for me to potentially get in at. Now, if you're up here and you're telling yourself up here that it can go up higher to a different level up here, I'm not saying that it can't go up. It's just you can't be getting in at the top. One of the number one rules is not to long tops and not to short bottoms, right? You wouldn't short down here to go down. There's too much support down here. You got the moving averages, you got a volume profile, you got this candle aggressive buyer candle taking out this little doji. You have the dojis that are double support right here. So you have a lot of support right here. So if you were up here getting in long to go up, you there's a lot of resistance with the 666 right here. It hasn't busted through aggressively. This one, pretty much dead stop on the 666. So instead of micro scalping from here to here to here to here and taking 10 trades in this little area, um, I would recommend you zoom out, look for either fib out. You can fib out this leg from this doji down to the bottom to see what plays there could potentially be, because you'll have the golden pocket probably somewhere around here, which lines up with the 100. Um, or you can look for something like this, where a seller's got taken out. Sellers try to come in, push it out, and the sellers got squeezed out. So right here, this is doji that I have marked off. comes back and retests that doji, which had the volume profile. You had the 50 SMA with the stop out either below the 50 SMA, below the zone, or below this structure back here. So you have a couple of spots you can stop out at, but it's whatever you can tolerate depending on the size of the account, or if you're on a prop firm. Um, you need to know how to scale out in and out. But back to the root of this is, look at RSI. Do you guys see how RSI is saying down? So if you would have got in here to continue going up when you're going against the strength of the current price action, this is a signal right here that you should not be longing up here to go up. You should wait for this to at least tag the 50 RSI or the overcool before even thinking going long. Um, Even though it was continue going down, look at right here. Even right here, it was still going down right here, right? And it on this hump right here, usually what I tend to do is I'll keep my crosshairs and I'll wait for the RSI not to break that. Now, if the RSI breaks that, then yeah, I can potentially do this, break the 666 and do that. But it didn't. It's kind of like a double top, maybe a slightly lower high, and you just wait for it smash through the 50 RSI. So if it smashes through, it's probably going to come down to the overcool. And if as you go along right here, as soon as it breaks, so it broke right there, right? You're telling yourself, I'm not getting in until it hits this zone or it hits the overcool. Look, it hits the overcool, hits your zone, you can get in. You can get in at that first tag if you're that type of trader where you get in at first tags. Now, if you want to be a little bit more cautious and a little bit more safe, now you see it going up. So you can get in right here at the first pullback, break above. That's another entry. And if you're using the moving average entry is aggressive candle breaks above the 10 SMA. You wait for a higher low off the 10 SMA. You get it right here. And then you can either, like I said, depending on what type of trader you are, you're either going to enter at the first tag above the the confirmation tag of the 10 SMA, or one tick break above this red doji, so you would have entered right here. Or if you're a volume profile trader, you can wait for the break above this profile and then get in. And then your first target would be the 666 if you're getting in up here. Why? Because that's resistance. Not only that, but look at, you got this volume shelf right here. You got that volume shelf of resistance. Now, if it breaks through that, then you stay. But I'm just saying, this is a place where you should be cautious not to close out a trade. Now, you can close out 75, 80% of your trade here and let some ride, right? Usually what I tend to do is if it hits my target here, for instance, this is just an example. If my 666 was a target and it hits it, close out 75% and attach a trail stop on NinjaTrader to my 10 SMA. Look, I would have kept going and I would have got stopped out right here. So I would have got a little bit more points. But back to Toad, let's jump in on it, see where you've been, see what you've been up to, and see how it's going trading. Hopefully you've been a little bit more consistent and still practicing your main strategy.
That's good.
Share.
I got
Go ahead and share. You're cutting out.
Okay, is this any better here?
Yeah, you're better now.
Okay. The Wi-Fi is pretty good, but it's not as good as I normally have. So I have a recap here from Tuesday. I was actually doing some live recording. So I'm doing that.
Oh, first off, hey, hold on, Toad. You gotta give us your YouTube. We gotta see what you recap.
Oh yeah. I made a YouTube video. I made a YouTube Toad Sage 55. Um, and I'm putting on their recaps, forecasts. Some of them are private, because some of them contain like strategies that are kind of proprietary. And so just out of respect for, like PRT, strats and all that. And I'm putting up forecasts and trade recaps, and then like daily reviews of the forecast, seeing what went right, what I should have had more conviction on, where stop should have been, stuff like that. Were very helpful.
Yeah, definitely. That's a new way to journal. That's an awesome way to journal, especially with other traders, newbies. I'm sure that'll help them out. So shoot me the link
Yeah,
after we're done, and post it in the description so they can join and follow along with your recaps.
sounds great. Yeah, I think yeah, I got the idea from was it Lance Redstein? Yeah, I think with SMB, and he said that basically he did like a highlight reel each
Yeah,
day. So that's what I've been doing is I go ahead and I take these, and then I timestamp the recap. So then I can just refer back to the critical moment, So you start with like a 3 hour video, but then pretty quickly you can trim it down to like 10
yeah,
minutes and stuff.
yeah. Cool.
Yeah, look forward to keep doing it. So then which to Facebook, because then I can pull these up pretty clear. And I
Can
got
you
in, I'm gonna
maximize your window?
find, yeah, so I don't know if it'll still capture it. Does it here with the full screen?
Yeah, you're good right there.
Cool. So we were around what I was looking at on the day here. We're looking at 9:45. So this Ninja Trader is from the actual live on the day, and then trading news later, where I've got on the back the RSI and back clouds. And so zooming forward a little bit in my recap video, I fast forward this recap, and then it comes down, and we see I entered right here on, and this is a situation where I went ahead and entered on this tag, and I was trying to work on it here, so I entered one, and the plan was to build. Although I think it just ran in my favor, and I just got out with the one, which is something Brandon mentions. I actually remember him on meetings. He's like, get in one, and then pops in your favor, 10, 20 points on NQ, take it off. You know what I mean? And then you can get back in. So trying to remember that and not FOMO and get into a full position right off the bat. Um, so yeah, I entered here. I figured it out. I saw it hit the 50, and then it bounced up a bit immediately. You got 2 minutes left on the candle, the 5 minute candle here. And it also hit my anchor. So if I'm going to zoom over, we got this candle here, and then that is this candle here. Did that zoom in, by the way, on my screen recording? Oh, hello.
Yeah, you're good. Just the anchor VWAP sign though, it's kind of in the way, but it's okay.
Yeah, yeah. I'm gonna see. Maybe I can, if I pause, like, did I get rid of that? Yeah, it is kind of in the way. That's annoying. I didn't realize that.
Now,
Um,
now you said that you hit on the 2 minute. Have you noticed that the last 2 minutes of a 5 minute candle, the action picks up and it kind of starts to reveal itself if the candle itself has strength or if it's
I
a weak
haven't.
candle.
I've seen it, but I have not ingrained that yet. Like I don't
Okay.
feel it yet, but I can see
Yeah.
it. Because this
Yeah,
one in
that'll come with screen time where you'll be like, okay, the last 30 seconds of the 1 minute candle, the action's a little bit more volatile. Same with the
right.
five where it's getting more volatile and the action's picking up and it's actually gonna reveal itself. So like that, you can kind of predict or not predict, but kind of how I narrate on the chat, like, hey, I want this candle to open up strong or open up green or something to that effect. So like that, you can be like, okay, if this next candle opens up strong, then I know I'm correct and I got in
Yeah,
on a good location or a good price.
yeah, and that's something I have a bit on the 1 minute. but not yet on the 5. Like I can kind of
Yeah.
see it on the 1 minute where if I get it, you have a strong candle, then you have a doji. And it's like, all right, I'll get in right here and at the open of the next candle, and it should just go. Like it shouldn't
Hmm.
hesitate. It should just go. But I haven't gotten that on the 5 minute point yet.
No, you'll get there. You just gotta practice a little bit. It took me a little bit with the 5 minute because at first when I jumped to the 5 minute, it's like because I was used to the one. The one is like up and down, up and down, up and down, and the
Yeah,
5 minutes a little slower. You're like, damn, this is too slow for me. But you just gotta get used to it. There are some big candles, especially if you're on NQ. You know, it can be a 20-point candle on a 5 minute, or it can be a 50 point. Lately, the last couple of weeks, it's been like a 50 point 5 minute candle or something.
yeah. So I'm gonna get better at learning that. I'll figure it out. I really, in the end, I'll be using it all. I
Yeah.
think there's edge on the smaller time frame. There's edge, larger, like I said, investing less capital and more time on the larger time frame stuff.
Yep.
But on this trade, so yeah, I figured out it's data candle. I figured out you see the fib is this 100, so I did that high low, and actually my area from the 23.6 or whatever to 0 is transparent. So to me, that's like the no trade. You should not be in the trade. So I just made it black and put stop out zone orange. So it comes back, it bounces to 50, it pushes the anchor. You can see the sharp turn on the anchor over by my
Yeah.
cursor here.
Hmm.
So the sharp turn is where the anchor was and where it actually tagged the anchor. So this is actually what I was kind of talking about earlier about how anchors become self-fulfilling because it actually tagged the anchor at this turn. That's where it actually tagged it, but then it pushed it all the way down here. Or at least it got really close to looking like it was going to tag it.
And that's your 5 minute. That's your 5 minute chart right there.
Yeah, yeah, that's
So look if you would have marked off this little candle right here. See how I got taken out by this candle?
yeah,
But I would have just marked off this candle right here like a zone.
right. Like, I did not notice my recording. Oh, there we go. So now the box is gone, but you can't see my trade.
Oh, it's all
Yeah,
good.
yeah. Actually, that's one thing you mentioned a couple times that I've incorporated a little bit, but not
Not
entirely.
only that, but
Right,
you had like two gaps right here. I don't
these
know
are
if they're,
trading view gaps, so
but look, I mean,
I would.
this one played out perfectly to that gap. I mean, to that tag, but
Yeah,
and that would give you either have the gaps or if you're gonna use trading view to chart, you're gonna have to get used to using the gaps or using these candles. I think they'll
right.
be beneficial to you, even though they're not on other charts like NinjaTrader or TradingVate or TradeOvate or TOS, because we've
Right.
known that Brandon said that yeah, this gap was most likely not on TOS.
Yep.
But hey, you got to use what you got, right? If you don't got TOS and you're using TradingView, then you know how important we say gaps are. But
Yeah,
this little candle right here is what stands out to me. And it only
right.
the reason why it stands out to me is because it got taken out and there's a pullback, but it lines up with your anchor VWAPs. So I would tell myself, as long as it holds this candle and this anchor VWAP, then I can get in long or whatever the case is. If you're,
Yeah,
that to me is confirmation.
yeah,
Just
yeah. So
something to
then
look out
on,
for.
yeah, I think I mean, the anchor plus the bid, which is on Ninja, plus those candles there. I mean, that right there is three at least stacking uh factor argument pieces. And then you got the Mac that actually the 5 minute Mac had a taller wave. I mean, this is obviously push. Um, so yeah, I'm starting off with a winning trade here, and then eventually, but I've got the Ninja here as it's moving. Uh, my favorite. Yeah, so the next candle, I was glad that I got in at least one on this tag. The next candle immediately reversed. So that was this one. And then my target was top down 5 minute from this high, which was lined up right about there. So this recording, this here, my live recording of trading.
So hey, go back a little bit.
Yeah, yeah.
So you said you entered on this one here?
I entered on this right here. Yeah, when it actually came down, so we tagged my anchor, got a little bit of strength, tagged 50 of the data candle on my ninja, got a little bit of strength, and I entered basically like, I mean, where was that on ninja? Entered actually below this, so right about like here, I suppose it then
That's where your
below.
stop was?
The stop was down here on ninja, so on spy that would correlate to this is actually what a 1 minute. That was that's integrate. I switched to a one. So that
Your
correlated to
stop would have been like
about
way
under
down
this
here,
low.
huh?
Yeah, something like that. So I was trying to make it about. I was going for about a 2 to 1, so about 17 ticks, so 3 4 points, and I was going for about yeah, so what 1.75. I was going for about 6.
So you probably got out up here, huh?
Yeah, so I go ahead and that forward. Um, the forward bit. I actually got out of it, right? And then it went further in my favor. I'm pretty sure. Yeah. So I got out. This is the second grade I took. So I got out here on this dude, this 1 minute doji. It looped down, hit probably the 50 of this candle, and then popped right back up to my original target. So I got cold feet and I cut my trade early here. When really I probably should have cut one, maybe added here. I don't know, or just held to my original 5 minutes. It's a winning trade, but should have
Wh-
squeezed more out of it.
what gave you that feeling to get out? Is that a lot of traders they get out way before a lot of new traders that have reached out to me, they're getting out. They're like, how do you hold to your target? And what
Um,
did and I just start asking them questions like, what did you see? What like what gave you that feeling to get out? And I think that's something that newbies need to identify with, or at least it's kind of like a alcoholic, right? You need to say that you're an alcoholic. You need to confess that you're an alcoholic before you can uh, solve the problem. You need to confess your sins pretty much so you can figure out the issues, the root
yeah,
issue that gave you.
but trade.
Yeah, go say your 13 whatever it's called. But yeah, what
Um,
did you see that made you cut that trade short? Was it
yeah,
that
I just expected it to.
doji that wicked you out? This one?
Um, this right here is 5 minute. So it's actually, yeah, this is, oh, that's like, the 1 minute's over here on Ninja. Yeah, it was like it pushed up here and then it came back down. Uh, and it kind of made, I don't know if it's that actually closed or if it's about to close, but I didn't like that it pushed up and then wicked back down. Um, and like 2 minutes later, I was like, oh, I'm glad I got out for 5-5-4-3 instead of 5-5-4-1.5 or whatever. But then if
Hmm.
I had held 1, 2, 3, 4, 5 more minutes, it would have been perfectly in my favor. So it was like this wick as well. I kind of expected the next candle to fully follow through. Um, when really for some people, I mean, this would have been the entry. For those that didn't catch it, this could have been an entry on this WP, or this could have been an entry to 50% of this candle.
Hmm.
Um, so, but then once I was out of it, I was like, all right, I got my profit. I'm not.
Yeah.
I don't know. I that, and it's also like, I don't know, something about I started trading MNQ instead of MES because I really do not like, for some for some
It's too
reason I
slow.
don't have the feeling. Yeah, yeah, I think I expect it to just go. I just don't have the feeling for MES. I don't know. And maybe that's because was trading MNQ for so long. Um, so I don't know.
Yeah, something that because I'm always looking for market structure as targets. Um, so like there was no humps like this, right? To tell you, oh, this is gonna be resistance. You don't have nothing like this either, where you have a little speed bump in this leg down. So if you get in down here to go long, or even if you get in here, your first target should be somewhere around here, because that's where market structure is. That's where buyers and sellers interacted a lot right here, right? So lock in right there, and then let one ride to here, or let it ride until you don't. And that's something that I've learned from Tom Hugard is there's nothing right here stopping this price action from going up, right? Like right here, there's a couple little pullbacks. If you would have seen that on this side, like right here, like this, like this, maybe, then maybe that should have been like, okay, we hit a little bit of resistance there. How's it gonna react down here at the bottom? You know, but just keep an eye, take a mental note of this. There's nothing slowing this train down, this leg down at all until it gets up to this area right here. You notice that? And you got in at the bottom. So you should be even, I mean, look at right here. It came back down to this area because that was a little speed bump. And look at that's where it pulled back to this little speed bump area. Pulled back and then it slungshot up because there was price action on this side, right? But over here, you're already here. There's no price action until you get up here. You see that? That's more of a price action
Yeah.
characteristic instead of like a indicator characteristic,
Right.
right? Just like right here, right? Like on this side, look at this. It starts to slow down because it has a wick right here on this side because of this. Now, I'm not saying that it's going to pull back every single time at these areas, right? I'm saying that those might be speed bumps or areas of, hey, I need to be alert. I need to be alert, right? It blasts through here. Where is it going to go? To here, right? So I need to be alert because sellers might come in at this area. And look, it lines up with your anchor VWAP. So there's a lot of resistance right there, right? I'm not saying close your trade, just be an alert because a big red candle might come somewhere in this big zone right here. You might do this. Now, if you play it, I don't know if it does it, but it probably went like this, came back, hit it, and then went up, maybe hit it one more time, and then hit the anchor. But that's just something that,
Yeah, so playing it now, seeing the rest of the action. This is actually this is a five, this is a five, so we're at right here. And then so I saw price come up. This was a losing trade. I saw price come up to this anchor here from the top, pull back down into this bearish hammer. So then I just got in short here, and this is the problem with when I cut the trade early. Then I'm FOMOing, thinking, all right, well now it's coming back down, so now I got to get into this trade. Um, And this one actually came back down into my favor a little bit, like 3 points, right? So it was correct on the continuation of this big rejection. I could have gotten like a little scalp there. Um,
Yeah,
but
but
then I think I ended up getting out flat on that one.
do you notice something that I notice right here, right?
Um,
Because you got in down here, right? The first trade,
yeah, I
somewhere
got
down
in
here.
actually around here.
Yeah, so you got in down here, which is good because it's what was near your entry there.
Well, it had gone through this anchor, but mostly the fib was and also the 50 on the RSI.
Hmm.
And we were on positive max. So that was all my reasoning there.
So now, what was near right here where you entered short? I know it might have went in your favor, but
The 161 of the fib.
oh,
Um,
there's a fib right there.
yeah, so this red line, this red dotted on my trading view, so 161 of the body. Um,
Hmm.
and then the high low fib was at the top of the candle. So these are two 161s. Yeah.
Yeah,
Right.
but for your main strategy, like sometimes I never like let's say these are moving averages, right? Right here, like that. Well, let me change the color so you can see the difference. Let's just pretend that these are moving averages. Oops, hold on. How do you make this line thicker? Oh, here we go. Let's just say there's moving averages right here, and then there's another moving average right, oh, a different moving average. Oops, and another moving average up here.
You actually kind of made them, right? I've got on my chart, I've got the 9 EMA and the 21 EMA here. They're pretty faint, but
Yeah.
they would have
No,
been like
well,
here and
the
like here.
the point that I'm trying to do is there's no anchors near your entry, right?
Uh-huh. Yeah,
And
yeah,
that
yeah. I
and that
FOMO'd
that's
into it.
like no man's land. Like
Hmm.
you should have entered down here, up here, closer up here, or enter down here where your anchors are. Because right
Yeah.
there is like coin flip. I don't know which way it's going. Let me just let me just get in. To me, that sounds like you said FOMO, and you uh, you have to try to practice like get in where your strategy says to get in. After you're lasered in with your VWAP strategy, and then you like let's say a month from now, you're already lasered in with your anchors, right? And then you start using your fibs because now you have to get used to fibs before you integrate your fibs. Because if you're not used to all the plays that we play with the fib, right? The 161 shy fib play or the golden pocket play or the short at the 263, right? If you don't know those plays, how to enter, it's gonna muddy your strategy and you're just gonna FOMO and you're looking for an excuse to get in. And the easiest excuse in this trade is, oh, the 161's there, let me get in. When you should be trading it like the 161 lined up with the anchor VWAP right here, let me get in. Instead of, oh, let me just look for a reason to get in.
Yeah, and this is part of what I was saying earlier about the 5 minute chart versus lower time frames is that I wanted to wait for the 5 minute to actually come close to a close to be ready to close. And so but really what I could have done is gotten in one here on my anchor and I would have had a nice 5 point win on that one contract. And then
Mhm.
once it closed hammerish, I could have added another, and then I could have gotten out one here, and then maybe gotten out the second one flat, whatever. But I got a
Yeah.
10-point winner.
Yeah.
Um,
Yeah.
so I either need to. That's why I either need to drop my time frame, which I'm using the 3 now, or I need to start easing into a position for these longer plays
Yeah,
or
and
larger
where
plays.
your anchors are closer to where your anchor. Remember what I said. Ask yourself, where is the best price to get in? Right here, the best price is not in the middle. Uh, That could have been a good
100%.
play for
That could have been an ad.
that could have been either an ad or a play for a different type of like a fib player, right? If he was a fib player, he probably would have got in at the 161 or at the 100% down here or wherever it's at. I can't really tell. Um, but that's that play, right? So a fib player probably would have got in down here and shot it up here or something like that. Just
Yeah,
just
that
be
makes sense.
aware. Just be aware and ask yourself, where's the best price for my strategy to get in at? Maybe that's a better question to ask yourself. Once you start
Yeah,
stacking strategies, like Brandon, he strategy hops, but he knows how to do it correctly, right? He'll say, I'm getting in because it's the golden pocket. And where's my target? The top down anchor VWAP, right? But he got in at a good location, the golden pocket. Let's just say the golden pocket was right here, and your top down anchor is down here, and he lock in right here at the top. So he's combining strategies, but he's already experienced in it. And now I'm not telling you not to practice strategy stacking, but for now, only take the trades when the strategies stack together. If they don't, be cautious because we're focusing on your anchor VWAP. And if you're throwing in the fibs, that's going to confuse you or you're going to get in a bad trade. Even though if it worked out or not, you want to be careful when you're strategy stacking. And that's the way
that
that I
makes sense.
recommended it to anybody, even Easy, when he did his fair value gap. I would tell him only take a short when it stacks up with your 50 SMA or your 10 SMA. And he would take a short and he would notice that that's a double support or double resistance. So that's higher probability of him getting in a trade that worked out in his favor.
Yeah, it makes sense.
Now, I'm not bashing you. I'm just trying to help you out, bud. Does
Oh no,
that
yeah,
one seem
I'm
like
not hurt.
uh, um you want to? I know we have a lot of strategies, and you want to try to focus on one strategy first. Once you got that one lasered in, for all means, throw whatever stack, whatever strategy you want.
Yeah,
But you have a higher probability when they're stacked together, not one's 10 points higher and the other one's 10 points lower.
yeah. I've been definitely chasing too many opportunities. And I
Yeah.
know which one I'm chasing and go get that one.
hmm Later on, you'll be like, okay, I have the anchors up, I have my VWAP up. Okay, price action's closer to my fib. Let me see if I could get in on the fib play and I'll target my anchor VWAP or
Right.
whatever the case is. But try to call out your play because if you got in on the fib and then you're like, well, I can go all the way, I can stop out over here at this, and you can't tolerate that type of stop, then you're just gonna be in a bad trade. It's gonna cause a bad trade. But we keep on learning. Keep on learning.
Yeah. Pulling up another trade here, which was totally off of anchors. I was going for this one. I realized my problem was I was counter trending when I could have just taken a with trend move. So, um,
So you were long in a long trade
yeah,
and it was on a downtrend?
Yeah, exactly. So I'm looking at this anchor here. I'm trying to get catch this bounce to at least let's see. It was counter trend, but I was like, we haven't tested this top down all day. It's like all day we have not tested this top down. It's like maybe at this point we're at least gonna get a still macro higher low um to push up to this anchor. So I got in here and then or got in right around this candle. And then it went under, right? Put in a few dozies. I got out here. I could have had some profit, whatever, but it was a good get out. It was a good exit because it's been way more.
Yeah.
So this
Toad,
is
one quick question. Is this the second or third trade you're recapping today?
this is the third. So the first one was that that win, and the second one was taking a short right after that, and now this is the third.
Okay, yeah, right on. All right, cool. Thanks.
You know?
Hey, notice how this one has a little bit more market structure, and that's probably what stopped you from going up. You had this whole market structure right here. Not only that, but it was a third lower low. One, two, and then what happens on the third? The third usually flushes.
Yep, makes sense.
Um,
Yep.
and it's hard to be, well, how do you know this is not the first, and this is the second? But I look at
Yeah,
it
so
as in patterns, right? This is not a pattern like this. I like to see, okay, like this. That's more of a pattern, right? So when it's in a
yeah.
pattern, I start to look like, okay, that's one, two, one, two. The buyers couldn't push it out, and the buyers would have to try to push it up here before it can get up here.
Uh-huh. Yeah. We didn't make a single higher high. You know what I mean? I was
Yeah.
going for a I was kind of, I was kind of right in that I could have gotten a couple points out of it. I mean,
Yeah.
I got in 42 and I could have gotten 45, 40, 46 out of it. But in the end, I should have gone with trend. See, when I first started trading like 2 years ago and then totally dropped for 2 years, I would get burned taking the continuation of moves like this. So now I think I've got a bad habit of trying to reverse the market. I got to
Yeah.
definitely take more just with trend, which I guess the final one here is probably wrap it up with just one more. I could do one from to yesterday that I unfortunately don't have
Yeah.
the entries on because my ninja's acting weird. I look back at the end of the day and it just doesn't have my stuff.
Hmm.
I don't know why, but um yesterday I noticed we basically were flushing like all day, reversing the CPI.
Yep.
We got underneath the 423 of the 5 minute data candle, which is here. And then still we're making lower highs. And I was like, I think finally this is gonna be the bottom. This lined up with a couple good levels I had, but I had to go to a meeting. So I was like, I think it's gonna go there. So it's like what can I take on the way? Which is kind of forcing. So I don't know, but it was at least a decent setup. I went in for the lower high here, eased into a position here. It went a bit in my favor, came back up. And I had, I think, two contracts here. I got this flush back down into this zone. I took one and then it flushed down for another just 3 minutes. And I took the next one there and then headed off to work. So this is one I took yesterday where it's kind of tough, like continuing to go with trend when the trend has flushed so deep.
Hmm.
Um, but I think regardless, that's what I should be doing. So it's like even though I guess, you know, you got to take the good and the bad. Like, I think I kind of forced this trying to get in a trade before my meeting, but in the end, it's like it was a high and lower high. It was off my anchor pushing down here. We were well below the 423, so clearly it wasn't really expecting that. And I had a level down here that I thought we were going to put in a low a day at, which we did. Yeah. So so that's this one and that whole trade here, which again,
Uh,
which I had to execute on that later.
now what make? Oh, you probably got out so fast because of the meeting, huh?
Yeah,
You
exactly.
got
I
out right
got out
here and right
fast
here.
because yeah, exactly. I was like, I'm gonna take profit on one of them here, and then I'll just take it here, and then I got to get out. When really, I would have held. I would have tried to hold at least one down to here. That's
Now,
why I got out
if you
fast.
enter here, where would your stop have been?
Pushing. See, that's a good point. Probably pushing up to like here.
Would
But
that
you're
have
right. I
been like
lacked the plan.
a 5 point stop, or I mean that's NQ, huh? So it'd probably be like what? Oh, that's
Let's see. I
QQQ.
mean, 70. I was in at 470, looking to get all the way down to 400. So I was willing to risk probably. I mean, we'll see. Just the way I'm saying it right now is exposing that I got in without enough of a plan. Um,
Hmm.
but if this pushed back up here, would have been looking to close it out and reset and then see if it broke this high.
Yeah, as
So
something that I pulled from another trader is he uses 20 to 30 tick stops, which is 5 to 6
tick or
points.
point? Oh, okay.
Ticks. Yeah, he does 20 to 30 tick stops, and his first target is 50, and his second target is 100 ticks. Which is a lot of points, but on NQ I mean, that happens just every 20 minutes.
Yeah. Yeah, that's a style that I've seen and I've thought about using. But I don't want to jump around like it's tough. But like that sniper entry of really being like, I'm going to snipe this with a 3.5 point stop and go for
Hmm.
the 5R.
Well, I would
Um,
say a 3 or a 5 point stop on ES. Anywhere
oh, on
between three
ES.
and five is good. On NQ, that's probably,
That would equate to
10 to
like 20.
15 points or something.
Yeah.
At 20 points maybe.
I think it's six. It's about
Or
6 times or whatever.
yeah, because I mean 20 points at $20, that's $400 stop. Can you tolerate that? And that's with one contract. With if you're on the micro, that's $40, which is easily be tolerable, right? And that's something that came up this week is, maybe to pass your prop firm, jump on NQ. If you're having a tough time getting a payout, I highly recommend passing your combine, jumping onto micros, and instead of trading one NQ or one MES or one ES, jump onto the micros, trade 8 to 10, because it's the same, right? Maybe a little bit less. If you do 10, it's the same as ES or NQ. But what the micros allows you to do is locks them in, lets them ride. Right? It doesn't make the stop any better if you're trading 10 contracts of micros versus one mini contract. But it does allow you to manage your position better, right? Because
Yeah.
if you're in minis, you can only trade one contract and then you're out. With the micros, you're gonna have 10 contracts, lock in 7 or 8, and let some ride to potentially your last target. So that's what I recommend if you're having a tough time getting payouts. Jump onto the micro. There's no shame on jumping to the micros. You can still make some money. Yeah, you're not gonna make thousands of dollars, but you can make 300 to 500, $600 on NQ real quick, even on MES. Those base hits add up, and And not only that, but you can start practicing managing your trades better.
Makes sense.
We'll get there.
Yeah. I mean, yeah, I'm definitely I'm improving here. I think this week was looking at these trades here, it's all SPY and ES now. But I really think I don't know, feel the movement of and view better. So and then this week, last week was like a half week, a holiday week. So this week came in just a little bit like rusty, and I'm not in my
Mhm,
normal house. So I'm looking
mhm.
forward to seeing next week getting into what kind of trade I'm gonna have, trade a little bit more free flow and what I can bring here.
Yeah, cool.
Yeah, man. I mean, it's good stuff. Like, I've only, I'm
Overall,
into what our ninth meeting, but it's been good.
yeah, I was gonna say overall, do you think it's helping like fine tune your strategy or at least
Yeah,
trying
for
to
sure.
find consistency? If it's not helping, let me know so I could come up with a different lesson or something that might help you. But
No, I
because
think it's
this
good.
is,
I think,
I was gonna say,
yeah,
because
go
this
ahead.
is my first time going over anchors, so I'm learning this with you and with
Right.
everyone else along. And usually I challenge myself to learn a new strategy so I can help you do better. And not only does it help you, it helps me, it helps all the other members that are trying to find that strategy that helps them make good trades. And that goes for
Right.
any of the strategies that we have. Any new members listening to this, find one strategy and focus only on that strategy, right? Strategy is either anchor VWAPs, fibs, moving average. Um, what else do we have? There's a couple other micro strategies within some of these strategies, but you want to find that strategy and learn how to use it, and then slowly add the RSI, slowly add the MACD. If you like TTM, add the TTM, and then combine it all, but learn how to use each component
Yeah.
of the strategy, and then smash it all together, and then you should have a really strong strategy. Keep in mind that not one strategy is 100%, no matter what they promise you or what they do.
Yeah.
Brandon always says it always works until it doesn't. So yeah, you just have to keep practicing the good trades. The bad trades where you're getting in the middle of no man's land, you gotta stop those. You gotta just zoom out. If you feel like you're getting tunnel vision, because I noticed this through a lot of the participants that went through finding your way is, and even me, I've experienced it where I was like, oh yeah, this is a good trade. This is a good trade. And I got tunnel vision and I'm too zoomed in. And I didn't look at the bigger picture and I was like, fuck, it went against me. And then I would journal. Got tunnel vision. What am I gonna do? I'm gonna zoom out and look left, look for market structure. You gotta you gotta find that feedback loop. Just like Ray Dalio and a couple other like Alex Hormozy and all that. When you start a business, you need a feedback loop. Whether it's your customers telling you your product is bad or your service is bad, it's the same thing with trading. If you have a bad trade, you need a feedback loop. What's a feedback loop? And that's why I tell you guys, okay, I got out or I got stopped out. Okay, what did you see that made you what did you see what happened after you got out? You got to identify what happened after you got out. And then after that, that's why I take a couple screenshots before and after. This is what kept me in. If it was a green trade, RSI was bullish, MACD was bullish, volume was bullish. I was with trend and I got 20 points. And now if it's a bad trade, okay, I got out, I got in because I got FOMO. I got in the middle of no man's land, right? And then you look at the RSI, yeah, it was bearish. I should have not went in long. MACD was like it did a fake out. Volume, there was a red volume beat. Um, you have to identify the issue, identify what you could have done better, and then the third part is how are you going to correct it? That's the feedback loop, and it does it again, right? So you correct with that issue, whatever issue got you in that trade, whether it's tunnel vision, FOMO, um, you seen chat somebody making money or somebody said I'm getting in and you got you got trigger happy and you click the button, whatever it is, identify that issue, identify what could have prevented it, and then how are you going to correct it, and then you correct that issue onto the next issue. What issue was what got me in this trade, and then repeat the same question, feedback loop. And I noticed every time I had an issue, like my issues were my entries, right? I corrected my entries with the fibs. How am I going to use the fibs? Okay, I'm only going to get in if it goes down to the golden pocket when it confirms the golden pocket. Um, so I corrected my issues or my entries, and now second issue, getting out too early. What am I going to do to hold to my target or hold to a decent profit take? And then I would figure that issue out. Okay, I got my targets cool, and now I got to figure out because I noticed that once I got my entries straight, because I didn't want to even work on my stop because I told myself if I could get my entries laser, I don't have to worry about my stop. And if I have to stop out, oh well. I stop out, reset, take a break, come back, reevaluate, and on to the next trade. And then on to the next issue.
Yeah.
And then
Yeah,
that
that makes
that
sense.
that you have to build like standard operating procedures, right? Just like I like that you started doing your recaps and your forecasts right after the market reopens. That's freaking
Yeah.
awesome. Because have you noticed that it's helping you out for the next morning or throughout the night if you're trading?
Oh yeah, the first week or 2 weeks I started doing it was great. I think the last week was dicey because that holiday week, I don't know, got a little rusty or whatever, but I mean, it definitely helped. I drew up 3 scenarios and for like 4 days in a row, one of the scenarios came true
Yep.
just outright. And I could have watched for the confirmation of that scenario and such. Um, that's also got to get the guts up. I mean, I've only been at this for really seriously like 6 months. I got to get the guts up to be like, because I'm looking back and you mentioned like, you're learning this strat, you challenge yourself and learn it. And I'm like, well, I'm thinking what's important to the strat? Like every strat, it's the first tag. So it's like there was a great entry for a short year when it reversed. There's a great entry here on like this tag. There's a great entry here after market opened at 9:45. If I drag this high down here, I'm sure there's a great entry here. There it is. And it's like there's so many great entry, but in the end, it's like you gotta get the guts up to just take one.
Yep. And you
So
and you gotta identify, right? You gotta identify that, okay, every first tag is a good entry. The second tag is iffy. The third tag is even more fucking higher or lower probability that it's gonna go in your favor.
yeah,
And that's something that I noticed with all the trading strategies, all the YouTube strategies, ICT, freaking Danny Trades, Tangent Trades, all these other people that I watched, they always get in on the first breakout, on the first tag. They always get in. And I was like, oh, okay. I can't be that scared to get in on the first tag, you know? And
no, I
and
mean
you
that's
have
the
to
thing. Scared
identify
money doesn't make money.
exactly. And yeah, is it gonna go against you sometimes? Of course. But like I said, not everything is 100% accurate and not everything is perfect. And if you can dig deeper on the times that it goes against you, you can identify a candle or identify uh, an indicator that kind of signals. Because I've noticed that when not all the indicators are working, one indicator is. Whether it's MACD calling it out, whether it's RSI calling it out, whether it's volume or or the anchors or something calling it out, something's gonna is gonna signal, okay, that was I've noticed sometimes RSI does it all by itself. Okay, RSI showed weakness, even though MACD was strong, volume was there was green volume beats, price action was up,
Yeah.
the RSI was diverging down, and next thing you know, it dumps. You're like, oh, okay,
Right.
next time I'll pay attention. When there's this much divergence, when there's 10 minutes of divergence, I need to pay more attention to it, even though the other
Yep.
indicators are not working or lagging more or
Yeah.
not clear, right? Not that they're not working, they're just not clear.
Right.
But yeah,
Yeah.
cool.
Makes
Any more
sense.
trades?
Thank you. I should cap it there. So I've actually got to head out.
Cool.
But I will be posting for recaps and forecasts how they're needed.
Yeah. And another thing, you mentioned something that last week was a short week because of holiday, or this week
Yeah.
because it's data week. Journal that stuff. Journal that stuff. Because something that I said in the pre-meeting was Powell Powell is like a professional poker player, right? Even when he's getting shot with all these questions from the reporters, he's giving you hints in the speeches or in the minutes or the interviews of what he wants to see so he can make a decision to pause, cut, or raise, right? Those are the three things that he can do: pause, cut, or raise. And they'll ask him, well, do you need to see housing prices, slow down so you could do a rate cut? And he'll do like a whitewash response where you kind of vague, but he says that he doesn't control the housing market or some shit like that. But and then he'll get asked that same question 20 different ways. And every little answer that he gives, he's like, okay, I need to see housing numbers go down or inventory go up or something. He's always gonna give you that little breadcrumb, like the job numbers, right? He's well, what do you need to see for you to cut rates? Do you need to see higher unemployment or higher job numbers or lower job numbers? And he'll kind of give like a vanilla answer, but you can pull something out of it. And if you can say, okay, I'm looking for higher unemployment, right? And this is like a month later. I mean, this is a month before CPI or jobs reports come out. So when jobless claims or whatever comes out the next month, you can look back to, okay, last FOMC or last meeting or last interview, he said he wants to see he wants to see higher unemployment, right? So if the unemployment report comes out and it's lower unemployment, then you know that the reaction should be bad. So you expect when the report comes out, right, bad, the numbers are lower instead of higher, like he said, then that's a lower chance of him not cutting rates. The market wants Powell to cut rates, but the numbers they're not signaling Powell to cut rates. So now you got that little breadcrumb stored in your journal. Okay, last time he said he wanted to see higher numbers. The job report came in lower, so it should be bad. And then you're gonna start to see a pattern. You're gonna start to see a pattern. Because sometimes,
Yeah.
and this is one of the hardest things that new traders have, is thinking how the market thinks, right? Because if the sometimes good data is bad for the market, like today, right? Inflation, supposedly CPI was lower, so it's good. It's good that the prices ain't going up. It's good that the prices are coming down, but it's bad for the market because he's not going to cut rates, right?
Yeah.
Because the inflation's coming down, so he's not going to cut rates anytime soon.
Yeah, and people that run the algorithms that have that, they know, like they have recorded and
Yep.
monitored what he says in meetings, and then they're waiting for the data to come out. As soon as the data doesn't align with what he was looking for, they're selling.
Yeah. Or
So,
or like I said earlier, like Al Brooks said, um, the data's already baked in, but the numbers didn't come out how they should have. And then the retailers do the opposite
right,
of what the market makers come in. And then the market makers are saying, well, we got them where we want them. Let's scam them. And then they either pop it and drop it when the retailers are going long, they're like, yeah, we got it, we got it. And they're waiting for their confirmation. And then next thing you know, they just flush them out. It's like, yeah, we
right,
trapped them. Because
right.
you got to think to yourself, uh, first think to yourself, the market's always looking to screw you. And then you got to ask yourself when you're trading is, how is the market trying to trap me? You got to
Yeah,
look for those traps because they're everywhere. And if you can figure out with the data, like I never used to pay attention to data. Some traders say data doesn't affect price action or doesn't affect the market. I beg to differ. Either it's baked in and there's a surprise and shit goes sideways, but data does impact the market, especially when there's millions of retail traders trading it. Some thinking one way, some thinking the other. Um, but what you got to try to do is decipher the market and how they think. That's one of the hardest things to do.
Anyone who says that data doesn't affect price movement has obviously never listened to Brandon narrate a day-to-day. You
Yeah,
know,
yeah,
it's
definitely.
it's very apparent if you know how to interpret it. And when you listen to Brandon narrate it, it makes a lot of sense.
Yeah, and Brandon has a deeper understanding, right? He knows like good numbers are bad and bad numbers are good. He knows when that's gonna happen. And
Yeah,
that's the level we gotta get to and push ourselves to. And the only thing that I know for sure has helped Brandon do that is he says he journals CPI days. He journals what Powell said. He journals what he he wants to see. Powell, meaning Powell, right? He journals what Powell wants to see. So like that, Brandon, come CPI day, the month prior, he said this about CPI that he wants to see this, this, and that. So when CPI comes the next time or the next month, he's already got one step ahead of all the other retailers that don't even take that into consideration. But that's why I love these data weeks, and that's why when Lasagna Cat started finding his way, I knew that he was kind of scared to play data, and everybody should be scared when you're first starting out trading. Is you should be scared of data because you don't understand it, and you don't know which way it's going. Um, but once you get a full understanding, or I mean, we're technically becoming traders slash economists, right? Because we have to understand data and how it's playing into the market reactions. Um, that being said, another thing that I started paying attention to, especially since I trade after hours, I go to investing.com and I look at the economic calendar because there or if you look at any other one, there it shows CPI for Japan, CPI for China, CPI for Europe, right? So like that, hey, tonight might be a good night to trade after hours because Europe is getting CPI or Europe is doing their FOMC. Because sometimes the play, remember what I said earlier in the meeting, sometimes price is manipulated in futures after hours and the move already happened. So when data comes out, you already got a leg up. Not only that, but you have a cushion from the previous night. That is a lot slower and it's a lot easier for you to read the market. So I highly recommend, like we mentioned a couple meetings ago, is do your review, do your forecast the night prior. Just like Toad said, that doing his 3 scenarios the night prior has helped them tremendously going into the pre-market or into the open.
Yeah.
But we'll cut it. What's that?
Yeah, we can cut it there. I'm saying no doubt. I think that's helped a lot. I know that on on days where you're like, well, I don't like if this holds price from previous, we're probably gonna push up. And then like Lasagna said, once you marinate on that, and then you wake up the next morning, you're like, you know what? Yeah, that's still true. So
Yep.
definitely helps a lot.
Yeah, definitely. And then if one of your 3 scenarios, let's say you went with scenario 1 and that one didn't play out and scenario 3 played out, and now you can adjust your trade plan for the open. Or or it at least should make it a little bit easier to adjust.
Right.
Cool.
Well,
Thanks for the meeting. Thanks for the recaps, and we'll cut it there. And if